So the simplest way to think about this is if you believe the stock will go up a little, but not a huge amount, you're willing to give up the opportunity that it goes up more than 10%. In return for giving up that opportunity, SocGen's willing to pay you a coupon, so 10%. So it's a trade-off of believing that it won't go up more than 10% as an example, but in return getting some sort of assured return at the end of the period. So this works really well when you think markets are range-bound and you have base rates which are already so high, and therefore this is a way of adding yield to your portfolio while taking a view on the stock.
Yeah, and so from what I understand, the auto call feature seems to really benefit if you have upside, but what does the knock-in barrier exactly do for this particular product? Can you help us understand in layman's terms, sir?
So if the stock in fact goes down at the end of the period, what we would do is to deliver you the shares at the end of that period, because these certificates don't last forever, meaning that you wanted to buy the share in the first instance, you must have that view. You did not think it was going too high, you're willing to collect a coupon, but if it does go down, then you own the stock. Mm-hmm. And that's the knock-in.
Right. So again, why do you think these structured certificates have not really caught on in Asia and that you're the first ones doing it? And why do you think it's specifically been something that's appealed to European investors versus, say, those here or even in the Americas, for instance?
So European investors generally, and broadly speaking here, are very yield-focused, and that's always characterized them. The market in Asia actually has been very vibrant, but it's always been OTC. It's been driven by private banks to only accredited investors. The difference with listing it on the exchange is that it comes with a broader distribution perimeter, meaning you don't have to be a private bank client or an accredited investor. You have to either qualify through your professional qualifications, or you take a simple test. In Singapore, it's the SIP. And because of that, it doesn't need to be distributed only by private banks. Today's two launch distributors are UOB Bank and UOB Kay Hian, which is the securities broker. So both the securities brokers and the premium bank can distribute these products. Of course, we're making great efforts to make sure that the education on the payouts and the structures and the features are all done. So we think this market will take a period of months to season and to figure out what investors' appetites are for various names. So tech names, Hong Kong names, US names, Japanese names. I think there's lots of possibilities there. But the first few structures, I think, appeal quite broadly. So autocallables and discount certs are pretty popular payouts.